Sometimes the most powerful compounders are the ones nobody is talking about. Today, we explore two such long term compounders. These two companies are quietly positioning themselves for multi year growth. One is digital first, affordable housing lender, scaling like a fintech but with the discipline of a bank. The other is a diversified financial powerhouse that holds seven high quality businesses. Today, we break down Home First Finance and Edelweiss Financial Services, covering their latest financial metrics, growth levers, digital advantages, and the key risks. Let's dive in. Hey there, I'm Palani, a technologist turned investor and an early retiree. I share my experiences from 20 plus years of investing in US and in India. This material is for educational purposes only, not a buy or sell recommendation. Please do your own research before investing. First up, Home First Finance Company India Limited. Home First Finance Company is a technology driven affordable housing finance company targeting first time home buyers earning below 50,000 rupees per month in urban and semi urban locations. Home First operates in 13 states and has 163 branches. So, what makes Home First special? It runs like a digital first lender, lean, fast, and tech driven. Just imagine approving 91% of the loans within 48 hours. What I love about Home First is their deep technology adoption in the entire loan process from start to finish. Digital capabilities enable them to fully digital onboarding customers, AI enabled underwriting, automated bank statement analysis. These amazing digital capabilities combined with the human touch positions Home First in industry leading cost ratios and super fast turnaround times. Q2 revenue grew by 28% year over year, reaching 447 crores. Q2 profit after tax grew by 43% year over year, touching 132 crores. Net worth has jumped by massive 175% in 12 months from September 24 to September 2025. Asset quality remains stable among the best in the sector. Overall, the company is showing consistent execution, the hallmark for premium lender. Now, what are some key strengths and growth tailwinds for Home First? One, deep structural demand for affordable housing, urbanization plus rising incomes plus Pradhan Mantri Awas Yojana ecosystem support. All these create a multi-year runway. Two, tech-driven scalability. Digital underwriting allows Home First to scale without proportionately increasing staff or branches. This is exactly how companies compound. 3. Superior asset quality. In a segment known for risk, Home First maintains best in class NPS. 4. Increasing institutional investor stakes. FIIs have been scooping up the stock from 26% in September 2024 to around 40% in September 2025. Coming to risks, there are two key risks that investors should be aware of. One, interest rate and competition pressure. Banks and NBFCs entering the affordable housing segment could compress yields. 2. Concentration in salaried borrowers. While this is a strength today, expanding into more self-employed customers could increase risks unless underwriting models keep up. So, final take on Home First. Home First combines the discipline of a bank with the efficiency of a fintech. Next, Edelweiss Financial Services Limited. Edelweiss is not just a lending company anymore. It has evolved into a diversified financial platform with 7 different businesses ranging from alternative asset management, which includes private credit, real estate and infra credit, and then mutual funds, NBFC, home finance, life and general insurance, etc. This multi-segment structure is why I call Edelweiss a mini financial Berkshire of India, not because it mimics Berkshire today, but because it is creating a portfolio of business. Edelweiss is essentially building a financial ecosystem that can compound value across cycles. Let's look at 3 impressive developments from recent earnings call and financials. 1. In the last 2 years, PAT of underlying businesses have grown at an impressive 24% CAGR. The management is working towards achieving 20 to 30% PAT growth for underlying businesses collectively in the coming years. But it may be noted that revenue or top line has slowed down the last 2 quarters due to slowing macro and credit demand and deliberate pivot on reducing balance sheet lending. This could be a concern at least for next 1 or 2 quarters if corporate and infra spending is not picking up. 2. The asset reconstruction business is the top profit making business in Edelweiss. With India's NPA ecosystem improving and more resolutions happening under IBC, which is Insolvency and Bankruptcy Code, Edelweiss ARC business is positioned to benefit disproportionately in coming years. 3. Insurance business are on track to break even by financial year 2027. A solid insurance business will provide a cash flow to use for investment or growing other businesses. There are 2 key risks that we need to be aware of. Risk 1, holding company discount. As Edelweiss owns many subsidiaries, the market may continue to value it like a holding company, keeping the stock undervalued. Risk number 2, execution across too many businesses. While diversifying is a strength, managing multiple businesses increases complexity. Any slip in asset reconstruction resolutions, insurance profitability, or fundraising in alternate investment funds could affect consolidated performance. So, final take on Edelweiss, it's not Berkshire today, but a multi-segment long-term value creation mindset is certainly in that direction. There you have it, Home First Finance and Edelweiss. 2 very different business models, but both are positioned to benefit from India's multi-year financial deepening. If you found this breakdown useful, hit like, subscribe and share. See you in the next video. Thank you.